Hey everyone, my name's Andy. My channel's Finding Value. If you like this content, subscribe, click the thumbs up button, leave some comments. If you don't like it or you do like it, please leave comments. That helps me progress this channel forward for everybody. So today I'm going to talk about knowing when to buy. And this is I'm just going to go through my thought process of I'll call it the macro. I don't know if it's technically the macro, but it's looking at the conditions, market conditions, then I look at the value, and then how does that translate into picking stocks and whatnot. So let's jump in. There's a lot of value in this, hopefully. It says knowing when to buy. What I first do is I look at the big picture. And I'll be honest, there's a lot of debate around the macro and the big picture. A lot of people, it seems like nobody can agree on it. Inflation, deflation, hyperinflation, everyone's all over the place. I can tell you that small inflation, it doesn't go to hyperinflation overnight. It takes time. So I think the hyperinflationists and hyperdeflationists are wrong. Could you have short-term deflation? Yes, but does it really matter if all they're trying to do is get more inflation? I'm more in the inflation debate. But anyway, I use data from the market, and this is all I have to go with. It's the data from the market, from the charts, from the market, from all of those things. There's lots of opinions from many. And you know what? I don't listen to those opinions. I form my own opinions. I get my cues from the market only and no one else. I don't listen to them. I don't have someone telling me something that I don't know. I know because I see it in the market and it's telling me what it is. And my conviction is so strong by seeing that. The only thing where I can get messed up is my interpretation of the data. That is where I could get messed up. So this is what I'm seeing today. I see real estate's going higher. So 4 million new home start shortage. What that means is we're short 4 million new homes, and they need to build 4 million new homes over the yearly demand of 1.5 million. We haven't been doing that. It's validated by all of the metrics: inventory, days on the market, foreclosures, interest rates. It's all going higher. Those are all supportive of higher real estate prices, at least residential. And when I look at the demographics, the millennials are larger population than Gen X. So we're going to go from baby boomers, smaller Gen X, to a larger millennial population. So that's supportive of higher real estate prices. I'm looking at the outperformance of copper over gold. Dr. Copper is smarter than everyone else and their opinions. This is telling us the economy is recovering. Period. You can't debate that. You can jawbone and do all this rhetoric. Dr. Copper's been right, and it's been right a lot more than most anyone else. Outperformance of platinum over gold now. It's good for the economy, bad for stocks. It means that an inflationary period's coming, these two indicators, and it's already here. Those are outperforming. You can't really debate that. That would be like debating, we don't have inflation, but we have inflation. You're debating like a fact. These are facts coming out. They're indicators. And when these indicators, what they do is they turn. And when you have all these indicators lining up, it's hard to debate against it, because you're literally debating that the indicators are not indicating what they're supposed to do. It's like saying we have an inflation of 5%, but we don't have inflation. It's like the definition of itself is contradicting that thing. Interest rates are going higher on a 10-year and 30-year, confirming the opinion. So that's kind of the macro there. Future demand. I understand the market supply and demand balance. You have to understand that for each of the commodities that you're looking at, or whatever you're investing in. You gotta know if there's deficits. I look for future deficits in the commodities, and I look for ongoing and sustained deficits for an increasing price environment in the future. And I want to buy it when it's in a small surplus or a very low small deficit, and not many people are looking at it. I look for multiple sources of evidence to see if something backs my thesis. Do we have shortages? Do we have deficits in homes? Are all of these articles about deficits and and homes being in shortage. I look for billionaires and what they're doing to confirm my thesis with their thesis. Do I have alignment with them? Do we have current underinvestment? That's just a hallmark of bottoms in commodities. What about the rig count? What about a whole bunch of other things that you can look at to verify your thesis? I look at extraction costs. I look at mining or extraction costs of the industry. Bottoms all have prices below the extraction costs of the high-cost producers. This is the lowest risk buying point for metals. So if you're buying physical metals, it is the lowest risk buying point to buy it under the high cost and medium cost producers. You will not lose money, I don't think. I don't think it's possible. Companies can still go bankrupt at bottoms, so you have to be careful. You can't just pile in saying, hey, look, it's way below the cost of these producers. Well, if you're in a producer that has costs that are higher than the current price, they could go bankrupt. So you want to reduce risk by buying many companies and spreading out that risk. Look for insiders buying, look for billionaires taking large stakes, etc. to reduce your risk. I deploy some money into the craziest kind of, we'll call it indebted companies with great assets to push the risk profile and leverage the most with little amounts of money. I am going into the throat of the devil, so to speak, to see what's there. And if I can escape it, it's going to be massive returns. Because what happens is all the shorts pile into these companies and drive them into the dirt. And I say, I looked at their balance sheet, or if you look at who's buying this, they're not going to go bankrupt. So you get in at the bottom of the bottom, and then all those shorts have to buy that stock back, and it rockets higher. 10% days, 15% days, and maybe even up to 30% days, day after day after day. And not many people have experienced that. If you haven't experienced that, I mean, you're missing out. But some people are starting to get that experience on this channel with a couple of the picks that we've had. And it feels really good. It's your portfolio grows very fast and that position grows very quickly. I also tie in technical analysis. I look at the charts to see the bottoming patterns. I look for downtrend breaks. I look at the volume of buyers and sellers. I use a very unique approach to seeing momentum through candlestick body lengths relative to selling strength. And I look for specific chart movements in the price patterns. And it seems like they always repeat in these bottom patterns. There's like 4 or 5 bottoming patterns that I see over and over and over. And it takes a lot of discipline and dedication to gain the knowledge and the skills that I've accumulated over time. And I'd read some trading books, yes, but it wasn't many. I mainly developed everything myself, just by looking and doing by rote memory, just repeatedness over and over and over and over. And valuation, tying this all together with valuation is extremely important. And ratio tells us relative value. I find highly depressed ratios and I load up. Technical analysis protects me from extraction companies going under, but not always. I am highly aggressive with buying of physical metals because there's no risk of default when the ratio tells me to buy. I just go for it. When the ratios start looking good and the chart looks okay, it may not have broken a downtrend, I still accumulate heavily and I cost average in. I go for it. When it's cheap, I do not stop. I am aggressive as hell. And I just keep adding. Because guess what? When you know the valuation and you've seen this multiple times before in history, you know what you're doing, you know what to do, and you go for it. You don't sit on your hands. You don't say, maybe I'll buy it next. No, you just keep going. You buy, you buy, you buy. You get in a pattern. Value, future demand, and real estate. So this is what allows me to know that gold must go higher. The commodities have to go higher. And that commodities are in the cycle, and we know we need to load up even in the face of pullbacks. Is because we know the value, we know the future demand out there, and we know that real estate is not going to crash us, and in fact is going to be an inflationary push behind us in residential. All of these have lined up in history like this before. These are the most important characteristics of investing. It gives you the confidence to go all in on some sectors because of the value, the future demand, and the timing. And what I mean by all in, I don't mean all of your wealth. What I mean is it allows you to go all in with your speculative money only into some of these sectors because you know the value of them and you know that future demand is out there. They're going to have to go higher. Always check leading indicators real time to verify your thesis is right. Always look, make sure that it's correct. This channel does all of this for you already. My updates and videos are actually providing evidence of the thesis being correct. You really need to be interested in the real estate market if you're not, because it's a driver of everything. If real estate goes down, it's going to be a crash. It's deflationary. If real estate's going up, it's most likely going to be inflationary and they're going to raise interest rates until you get into a housing bubble. That's the cycle. Now, stocks can fall. Stock market can fall and not affect the real estate market, where commodities can go higher. This happened in the 2000s. This happened in the 1970s. Both bull markets and commodities, the stock market did not do well. It went sideways or down at best. We're coming up to that same period where the stocks they're going to go sideways at best. If they go a little higher, it just means that commodities are going to outpace them, and they're going to outpace them rapidly. COVID obviously is a risk. If they start shutting everything down, then the whole economy is going to eat poo-poo. I'm against the shutdowns, but it would be very bad if they shut everything down, obviously, for everyone in any investment. So if you like this content, please subscribe. Leave comments if you like this content, or if you dislike it, leave some comments if you dislike it. This is the Finding Values channel, and I appreciate you guys listening. Thank you.